It's always fun to watch economists go back and forth about inflation and deflation. But since the recession in 2008, we've been in this kind of financial twilight zone. Everybody keeps talking about doom, gloom, and deflation, but the S&P just keeps rising. My question is, why is my rent so damn high? I bet a lot of you are watching this right now crying in your New York City shoebox with your AirPods on so you don't wake up your roommates in your $5,000 a month studio. I mean, seriously, how great of an investment must real estate be? Well, make yourselves at home because today we're gonna talk about residential real estate, and it's all going down on Real Vision's The One Thing. What's going on, investors? AK here. On this episode, we're gonna try and answer 3 questions. 1, why are rents so high? 2, is it worth it to buy a house right now? And 3, is housing the next big shoe to drop, and could it drive the economy off a cliff again? Keith Giroux thinks we're standing on thin ice when it comes to the housing market.
There are very dangerous circumstances today that you have to think about in terms of making decisions concerning houses. The first is that there are still millions of these redefaulting modified mortgages that are growing, that are still a problem, and like I said, there's really no solution to that. If you add to that the fact that you have millions of homeowners defaulting or in long-term delinquencies who have no intention of repaying the mortgage. That's what you have to understand. If you haven't paid a nickel over the last 5 years, you have no intention of repaying it, and you think that you can stay as long as you can, and isn't that just great for them? The only ones who lose are the lenders, which we don't spend very much time talking about. We also have what I mentioned before, home sales which are declining. That's always a danger sign. And the last thing, as I said, is the number of properties on the market, actively listed, is growing and shows no sign of turning around. If that continues, that's really big. So what does that mean for you? What would I do? There is no way I would consider buying a house either to live in or to as an investment with all of these circumstances and risks that I've been talking about. And the second thing is, if I were a seller, if I were a homeowner, I would seriously consider selling before things get much worse.
And that begs the question, how the heck did we even get into this mess? Keith had this to say.
If you think about it, it was like money falling from the sky. And in California, nothing was crazier than there. You could pull out $100,000, $200,000, $300,000 in cash because of the growing value of your property. The lenders were more than willing to shovel it out because they thought the prices would go to the sky. And what happened when home prices leveled off? Millions of these homeowners, especially in California and some of the larger metros, New York City and Chicago and around the coast, but it was nationwide, they found themselves with a much larger mortgage, and when prices began to turn down, very quickly the property was underwater. They were underwater and they started defaulting in droves. And that was one of the main reasons why the mortgage servicers decided we have to modify these millions of mortgages, otherwise this price collapse will just continue. That's
a pretty bleak outlook. And in Game of Thrones style, if you think this has a happy ending, you haven't been paying attention. Giroux adds,
you would think that with all of these solutions that would solve the problem. But it didn't, because almost from the beginning, millions of these modified mortgages started redefaulting. The homeowners, for some reason, whatever it might, they decided that my house is underwater and I can't really afford the mortgage, or I have no intention of repaying, and so they started redefaulting. Some of them have redefaulted 2 or 3 times. If you take a look at this next graphic, this is from Fannie Mae. You can see that the number of redefaults as quickly as a year after the modification is increasing between 2012 and 2016. So the situation with the redefaults is getting worse. A second redefault, the chances of redefaulting, a second modification is greater. So this problem, you have to understand, is getting worse as we move forward. My view is that there really is no solution to this massive problem of redefaulting modified mortgages. We're talking about millions of them. If that's the case, then at some point, many, if not most, of these modified mortgages that are redefaulting will eventually have to be foreclosed and liquidated. And when that happens, then it will really hit some of the major metros hard, and prices could actually begin to decline. I hate to use the word, but again.
And look, the bottom is probably not gonna fall out tomorrow, but maybe we're seeing this scenario rear its ugly head somewhere else. Jared Minnack came on Real Vision to give an update about Australia. Listen to him describe how housing weakness is infecting the entire economy.
What's happened over the last quarter or two is we're seeing signs that the downdraft in housing, borrowing, and wealth effects are starting to build steam, and that's making it increasingly likely that there'll be a recession. Now, I'm not making recession my investment base case yet, but if we were to get another 2 or 3 months of data like the sort we've had over the last 2 or 3 months, then I think investors should make recession their investment base case in Australia. And if we were to see a recession, trust me, it would be world's best practice. This would be a disaster given how indebted we are, how expensive our asset prices are, and the inability of policymakers to respond.
Sound familiar? Yeah, it sounds just like the situation in the US. So listen, whether Giroux is right or not, it still looks like the other shoe is poised to drop. We all need to pay attention to this shifting narrative and decide when's a good time to get in and when to get out. And I know I haven't answered the question yet about why the rent is so high. Well, it's high because real estate, like every other asset nowadays, has been financialized. That means the main purpose of your house is not to live in anymore. No, now it's just a financial asset that's used for speculation. And if you want to stay up to date on this housing situation to make sure you don't get screwed again, well then make sure you subscribe to Real Vision. I'll talk to you next week.